We're joined today at ActiveETFs InFocus by Bill Thomas, who is the CEO of Grail Advisors. Grail currently has 7 actively managed ETFs on the market and just recently released a white paper on fixed income ETFs. Bill, welcome to ActiveETFs InFocus, and thanks for joining us.
Thank you for having me. We're glad to be here.
Great. So just to start off, have you been satisfied with the level of growth and investor interest that Grail's ActiveETFs have seen?
Well, we've been very, very pleased with the level of interest. Our belief is that we knew that the asset growth was going to be a slow and steady race, and it's progressing as we expected. And certainly, we're seeing greater growth and focus in the fixed income strategies because it's been a fixed income market. So just as in the mutual fund space, assets have been flowing into the fixed income space, that's been the exact case for the ETF side as well. So we've been pleased to have a full array of products, and we'll be announcing a couple more products in a couple weeks in the fixed income space as well to complement what we have out there.
That's great. So where do you see ActiveETFs as a whole heading in the next 2 to 3 years?
I am a firm believer that the active ETF adoption is going to continue. If you look at the adoption in the passive space from '93 to last year, where finally ETFs overtook mutual funds, my belief is that adoption will take place in about 2/3 of the time it did in the passive space. I think it's just a better mechanism for investors. So I think over in the next years, you're going to continue to see it be a real asset gatherer as compared to its mutual fund counterpart.
Okay, now slightly on a different tangent, how is your business model different from that of other traditional active managers who are in the active ETF space?
So we feel very strongly that we want to deliver high-quality investment managers in a format of an ETF. So we're not out trying to bring out any strategy that knocks on the door and wants to launch as an ETF. We have a very strong due diligence program that we've got in place that makes sure that when that product goes through our screening process, that it's something we're very proud to have our name on. And we also want to believe that it's in a strategy in a sector that's going to gather assets and be successful overall. So we've got a stringent process, if you will. I will tell you that we spend a lot of time with inbound calls with people saying that they've got great ideas to launch in an ETF format, but we're focused on delivering really in the core areas and meet the needs of the clients in this market environment.
Okay. Now, one of your sub-advisors, Riverpark Capital, they actually filed to launch their own active ETF. Do you think more such managers might go straight to the market with their own active ETFs without utilizing Grail's platform?
Well, we're excited about our relationship with Riverpark, and we're constantly looking at other opportunities collectively to launch product as well. It just made sense for the strategies that they were thinking of bringing out and where we were going with our business. It made sense for them to consider launching those products on their own. But with that said, we're still looking to launch collective products between the two firms. It's a great relationship, and I think that the benefits that we can bring to the table in forms of the distribution breadth that we've got out on the street, the knowledge that we've got, and our wonderful service partners, we feel that we've really got a value add that helps out and gets people to market quickly.
Got it. Now, a few weeks ago, the Wall Street Journal actually reported that Grail Advisors is in talks to convert existing mutual funds into active ETFs. Could you tell us a little bit more about this?
Sure. So we've got several conversations going on with a couple fund companies where we are looking to convert their existing mutual funds into a ETF format, and that'll be the first of its type in the active space that has happened in the passive space. And it's a great way for investment management firms to move into the new technology of an ETF without having to start a whole new strategy and a track record and start gathering assets from dollar one. So we're excited about that because of the benefits. These fund companies see the benefits that the ETF has for their shareholders, and we see the benefits of being able to bring on board of a conversion of assets and deliver it in a more unique format of the ETF.
Mm-hmm. Now, what do you think would be the advantages of converting a mutual fund into an active ETF as opposed to starting a new active ETF altogether?
Well, the advantages are you're able to move the track record from one structure over to the other. You're able to migrate the assets from one structure to the other. You do need to proxy the existing shareholders of the mutual fund to convert to an ETF, but there the benefits are fairly substantial. Typically, the expense ratio will be lower because of the operating expenses of an ETF versus the operating expenses of a mutual fund. The tax efficiency, the liquidity, and the transparency are all four wonderful benefits that the ETF offers versus its mutual fund counterpart.
Okay, that's interesting. Now, do you think there's enough investor demand right now to justify converting active mutual funds into active ETFs?
Absolutely. The way I look at the mutual fund space, having spent my entire career there, is that it's a very crowded marketplace, and my belief is that those firms that either move into the active ETF marketplace at the beginning or convert existing strategies over are going to be rewarded with flows because of the benefits of the ETF structure. And just as you saw the early benefits of whether it was intermediary distribution in the load world or no load distribution through the platforms, those early adopters are rewarded with assets. And it's perfect because it's a less competitive environment. But not a doubt in my mind, it will be just as competitive here shortly as it is in the mutual fund space.
Now, I guess from the mutual fund provider's perspective, why would they have an incentive to convert their fund into an ETF when they can be earning higher fees from their existing mutual fund investors?
Well, the fee structure is the same. The investment management fee is the same to the fund company. I think that's one of the misperceptions about actively managed ETFs is that to do this, the investment management fee is lower in an ETF than it would be in a mutual fund. What the benefit of doing this is that the management fee remains the same to the investment management firm. It's actually the operating expenses is how you're able to get a lower total expense to the client, lower in an ETF versus a mutual fund. And so that's a huge benefit. So it's a revenue neutral move for the money manager. However, it's a very positive for the shareholder.
Okay, that's interesting. Now, this conversion process that you're describing, how is it different from the issuance of a new ETF fund class of an existing active mutual fund, which is a process that I believe Vanguard has under patent?
So this would not be a share class of an existing mutual fund. This would be a actual conversion of the product from a mutual fund format to an ETF format. So the mutual fund goes away and becomes an ETF. Mm-hmm. So it would not be a share class and therefore would not be at all similar to what Vanguard has done.
Okay, that's great. That's very useful information.
Mm-hmm.
Now, for the future, what kind of strategies is Grail Advisors looking to bring to market in the future through
So we, as I mentioned before, we're in the process of finalizing agreements with two more fixed income firms that we're very pleased to be marching down the path with. We'll be announcing them in the next 2 to 4 weeks, and we're excited about not only the strategies that they're looking to bring, but also the depth and breadth of the firms and the power behind them. And then we've also got some strategies that we are working on in the next couple months that are more international in scope, and so we're excited about that type of opportunity, especially when you look at how important international and global exposure is in client portfolios. So we're running very fast here at Grail Advisors.
That's great. That's fantastic. Thanks a lot, Bill, for joining us, and we wish you all the best.
Well, thank you very much. I'm glad to be here. Thanks for having us.